What's going on, guys? It's Jake here, and in this video I'll be talking about some of what I think are the best ETFs, and these ones all are actually available on the Robinhood app. So some things that I typically try to look for in ETFs is that one, they're relatively diverse. So some ETFs can be very, very specific, and some I think that are specific, like kind of hold some risk, and like if they are very specific, then I feel like that almost defeats the purpose of investing in an ETF. Two, I look for ETFs that have usually low expense ratios, and typically what goes along with a low expense ratio is relatively passive managed ETF. So what that means is some ETFs are they do a lot of trading within them. So rather than just holding a set of stocks and just like continuously holding them for like a very large period of time, some ETFs are traded more frequently and are managed a lot more frequently, and those ones typically have higher expense ratios. And there's nothing wrong with investing in an ETF that has a high expense ratio. That's just my personal investment strategy with those. And besides that, I typically look for ETFs that don't offer just like immense amount of risk, like ETFs that have like 3 times leverage associated with them, or any sort of leverage, whether it be inverse or not. Typically, I think those ETFs can lead to some troubles down the road. But anyways, getting into it, the first ETF that I actually like the most is probably going to be, or not like the most, but one that I think is good, I guess. These aren't necessarily ranked in any particular order, but anyways, one that I like a lot is VTI. So I'm going to pull that up on the Robinhood app, and if let's see, it should be up now, and let's look up VTI real quick. So VTI, Vanguard Total Market ETF. So as the name states, it's a Vanguard fund. It encompasses the entire stock market, and if we look down here, they have a little bit of dividend yield on them, and just like the simple Robinhood definition of it, VTI tracks a cap-weighted index that measures the investable U.S. equities market, encompassing the entire market cap spectrum. So like it says, it's cap-weighted, so that means stocks that are worth more, that have higher market caps, are going to be weighted heavier in this portfolio. So some like Microsoft, Apple, Amazon with very, very large market caps are going to be significantly higher weighted in this portfolio than smaller stocks like, I don't know, let's just say a random one like a Square Inc. I think Square Inc. I don't know why I thought of that one, but that one's like significantly less. So I like this one a lot. A lot of people ask why I don't own it. It's definitely a stock that I could own. I don't see anything wrong with owning this one. It's an ETF that I like a lot. I just personally don't. And if we look at the 1 year mark, up 4%, 5-year mark up 45%, and as you can see, it definitely had a little bit of a dip around December, which you'll see most of these ETFs did, and pretty much the entire stock market dipped around December, so that would be why with that. The next 3 ETFs are similar because they're based off indexes, and the next 3 are Vanguard S&P 500 ETF, and the next 2 are going to be non-Vanguard ETFs, and the first one's going to be based off the NASDAQ, and the second one's going, or the third one I should say, is going to be based off the Dow Jones. So the first one is no surprise here if you watch my channel is VOO, Vanguard S&P 500 ETF, and I like this one a lot. It's one I own, as you can see, like I can like sell it. And Vanguard S&P 500 ETF, I like it because it kind of fits all the categories, has a low expense ratio, it's pretty diverse, and it also just simply mirrors S&P 500, so there's not very much trading. It's a very passively managed ETF, about as passive as you can get. And as you can see, slightly higher actually than Vanguard Total Stock Market ETF, but still nothing crazy. Like you probably own stocks in your portfolio that have had better growth than this, but of course that's kind of the point of an ETF, is not to have crazy growth, but have kind of more steady upward growth. A little bit of a dividend yield on them as well, because that's probably around, I'd assume, the average of the S&P 500. I don't actually know the average off the top of my head. I think it's roughly around 2% or so. But this one, as you can see, I've owned this one for quite some time, and I've gotten quite a few dividends from it. I bought it back in 2017 at 223, and it's now at 256. So that is a little bit of a gain there. And as you can see, tracks a market cap weighted index of U.S. large and mid-cap stocks selected by S&P committee. So this also encompasses like a investing strategy that I like, is owning large market cap stocks. Typically I would probably never invest in a company that's under like $1 billion market cap, unless like I feel like super confident in that company or something like that. And typically most of the companies in my portfolio that I invest in are well over the $100 billion market cap range. Some like Apple are like way up there, but some like Netflix are like closer to the $100 billion range. But either way, typically invest in bigger companies. That's just part of my investing strategy as well. The next ETF is going to be QQQ, which is ProShares. Basically their NASDAQ ETF. I don't know why they call it QQQ, but either way, if we scroll down here, tracks a modified market cap weighted index of the 100 NASDAQ listed stocks. And so like that clearly says, just pretty much follows the NASDAQ. So within the past year, 7% gain was a little bit higher than the S&P and the total stock market. In the past 5 years, much higher, 98.51%. And this is one definitely feel comfortable investing in, one that I like a lot. One that I don't actually own yet in my portfolio. I've been really thinking about adding more ETFs to my portfolio, as well as just simply having a higher percentage of my portfolio allocated to ETFs, because I personally think that's, you know, probably one of the better ways to invest is to just have a diverse portfolio. But either way, ProShares has a lower dividend yield than the S&P 500 as well as the total market ETF, and that's just simply because the NASDAQ definitely has a lot of more growth-oriented stocks rather than dividend-related stocks. So if you were going for a different investing strategy, maybe perhaps you're like significantly more invested or want to be more invested in dividends, perhaps Vanguard S&P 500 might be a better bet. But if you're looking for a lot more growth but still has a decent dividend yield, I mean 1%, then maybe perhaps you'd go towards this NASDAQ-based one. But other than that, moving on to the next ETF is actually going to be the Dow Jones ETF. Ticker symbol is DIA. I don't know why I typed that in. DIA, SPDR, Dow Jones Industrial Average ETF. So past year, 4%, almost identical to S&P, and past 5 years is actually slightly higher than the S&P 500. And they also have a little bit of a dividend yield to go along with them as well, a bit higher than the NASDAQs. And if we go down here, let's see, basic Robinhood definition again. DIA tracks a price-weighted index of 30 large-cap U.S. stocks. So this ETF is significantly less diversified than some of the other ETFs like the S&P and NASDAQ. This only is looking at 30 stocks, while NASDAQ's looking at 100, and the Vanguard S&P 500 is looking at significantly more than both of those, and then the VTI is obviously looking at more as well. So, you know, one could definitely argue that the stocks in this portfolio are probably a lot better than, I don't know, perhaps the bottom half of the stocks in the NASDAQ, and probably better than a significant amount of the stocks in the S&P 500, but still offers quite a bit more of diversity if you're investing in the S&P 500 rather than the Dow Jones. But still an ETF I would totally feel comfortable in investing in, and one that's also very passive, and they don't do very much trading. Pretty rare actually for stocks to be added or taken out of the Dow Jones. Doesn't happen very often. The next couple of ETFs I'll be talking about are a little bit different, but still fit the same category of what I like to see in ETFs. So the next one's actually going to be Vanguard High Dividend Yield ETF, and the ticker symbol is VYM. And this ETF, as you can see in the past year, has had a little bit of lower growth, and then in the past 5 years has also had a little bit of lower growth than some of these other ETFs. But one thing to take into consideration, and that is, is that it has a significantly higher dividend yield on it. So 3.2%, which also Robinhood, just a note, doesn't accurately update their dividend yields, but so it's probably roughly around that or so, but that is quite a bit higher regardless. And as you can see in their definition, tracks the FTSE High Dividend Yield Index. The index selects high dividend paying U.S. companies, excluding REITs, and weights them by market cap. So that's interesting as well. They take out REITs. So these are just simply looking at high dividend yielding stocks that aren't focused on REITs, which most people, when they are dividend investing, probably take a look at REITs, especially for monthly dividends. But this one does not take a look at that at all. So the next stock I'll be looking at is also going to be another dividend, or I should say ETF. Next ETF I'll be looking at is going to be another dividend yielding ETF, and this one is SPHD, and I mistyped that there. But ProShares S&P 500 High Dividend Low Volatility ETF. Past year, they actually had some pretty decent growth, up 8%, and past 5 years, 45%, so pretty close to some of those other ETFs out there as well. And if we look at the dividend yield on this one, it is significantly higher, and it actually offers a monthly dividend ETF. So if we scroll down here, as you can see, I've been getting these monthly payments for quite some time. Like I have owned like a handful of shares here and there, but dividend yields have been coming in for some time now. And as you can see, the definition of them is it tracks a list of the 50 least volatile names chosen from a short list of S&P 500's 75 highest dividend yielding securities. So it's kind of interesting how they made this one. Basically, as the short description says there, they tried to pick stocks from the S&P 500 that have the highest dividend yields, but also don't really go up and down in price that much. They're very, they're not very volatile. So that also I think is like kind of interesting. I don't necessarily look at the volatility of stocks in my portfolio. It's just not something I pay attention to very much, but it is probably something that can be somewhat important. But anyways, moving on to the next ETF, and the last ETF is actually going to be Noble, NOBL, which is ProShares S&P 500 Dividend Aristocrats ETF. And this ETF in the past year, 7% or so, 50% in the past 5 years. And as the title says, this just simply mirrors the Dividend Aristocrats, which if we go down to the short description down here, is basically, well, they say equal weight index, but either way, 25 stocks in, or not 25 actually, I always say that 25 years. There's a list of stocks that have been increasing their dividend annual payments for at least 25 years. So when I typically look at dividend stocks to invest in, I think a very important thing to look at when investing in those stocks is, have they been increasing their dividend? You know, not just do they have a high dividend yield, because any company can have a high dividend yield for a year and then cut it, but the Dividend Aristocrats as well as the Dividend Kings are a good case study of stocks that have been increasing their dividend for a pretty long time, and it's probably relatively safe to say that that high dividend yield, you know, if they've been doing it for quite some time, they're probably going to continue to increase it, because oftentimes it's tough to tell whether or not companies are actually going to continue to increase their dividend yield or not, because sometimes companies do it when they have money to do it, sometimes companies do it when they don't have money to do it, so sometimes it's relatively tough to tell. I think that can be one of the best indicators to tell when they're going to do it or not. But other than that, guys, that's really it for this video. Those are a handful of ETFs that I like the best that are also available on the Robinhood app. But if you enjoyed the video, definitely leave a like and comment below what you think about these ETFs, and also if there are other ETFs out there that you like that I didn't mention in the video. And also, if you are new to the channel and are not yet subscribed, definitely consider subscribing. Oh, and my timer's going off. There we go. Definitely consider subscribing. I talk about the stock market, personal finance, investing, entrepreneurship, things like that. So if you're interested in that kind of stuff, definitely head on my channel. And if you like what you're seeing, consider subscribing. And also, one last thing. If you're interested in investing and you have not yet opened a brokerage account, or you hate your brokerage maybe and want to open a new one, definitely consider M1 Finance and hear what I have to say about them. Thank you guys so much for tuning into today's video. If you're interested in supporting the channel, there's an M1 Finance sign up link in the description, and if you use this link, you get $10 when you sign up and fund your M1 account. M1 Finance is a free to use online brokerage that has awesome features like the ability to use fractional shares and reinvest dividends. Using this link helps the channel out a lot, and I appreciate it very much. But other than that, guys, thank you for watching.